Have you ever wondered why people always say it depends when it comes to financial decisions? We'll take a look at why people say that, but more importantly, I'll give you a different way to think about decisions, and I'll talk about why it's important to change what your default option is. Hello, and welcome to the Plain English Finance Podcast, the podcast dedicated to helping you make smart financial decisions. I'm your host, Tré Bynoe, and I'm joined with my wife. Hello.
Hi. You changed it.
Yeah,
You threw me off. I'm
Yeah,
like,
change it up. Why not? So this episode is on, we'll see, hopefully it'll be a short one. I say that a lot. This episode is talking about different decisions that people make, and I think a lot of the reason that people make poor decisions is due to inaction. And what is my favorite saying about inaction?
No decision is still a decision.
Absolutely.
You really put me on the spot there. I was like, I hope it's this one this time.
Yeah, and you have to live with the consequences either way. So we'll go through 3 things that are really important decisions that people like to put off, and what the default option should be.
Okay.
And maybe you even might know what they are. So maybe you can tell us what the default
I'm
option
hoping
is for these 3 things. So first thing is going to be investing.
Okay.
How to invest. Second thing is what we should be doing with our budgeting and things like that, like what the goal is. And the third thing is debt versus investing.
Okay.
Okay, so which one do you want to start with? Which one are you most confident with?
All of them. None.
You can give all of them then.
Let's try investing, but I need a hint.
Okay, so
Or
when
something.
people say if somebody came up to you and they said, "Hey, Cease, you're married to an advisor, how should I invest?" What is without saying it depends, what is the default option? What should the default be? I don't know what to do, so I do this.
I would say, like, can I ask them questions?
Okay, sure. Ask me a few questions.
It depends how old they are. Oh, it depends.
No, I can't say it depends.
But it does. So I would
Okay, so ask a
say,
question.
how old are you?
I'm 45 years old.
What's your time frame for investing?
I just have money to invest.
Okay. And you just want to invest. What's your goal?
I don't know. I just don't know what to do with the money.
What's your risk tolerance?
Don't know. Don't know what to do with the money.
You should go talk to my husband because it depends. That's the default.
No.
Okay. I would probably say a broad index fund.
100% globally diversified index fund.
Is that what I just said?
Close enough. Yeah.
Broad index fund.
That should be the default. I don't know what to do. That is the default.
So wait, say it again. Globally diversified
equity fund.
Equity fund.
Yeah, index fund.
Okay.
That's the default. Low cost, own everything.
Yeah.
That's the default. So then what you do, so now that that's the default isn't sit there on cash and not know what to do with it and leave it around. That's the default. So now we look for reasons why we shouldn't do the default.
Okay.
What are some of those reasons that we wouldn't want to invest in a 100% equity diversified portfolio?
Like I said, how old they are and what they're using the money for.
Right.
Because if they're going to be taking it out in 3 months,
then it's a reason not to do that, right? If they haven't got an emergency fund yet, it's another reason not to do that. But instead of the default being leave it around doing nothing, that's what you do with the money.
So would you say you could put it in then fix it after? Is that a wrong statement?
I would say ideally you ask these questions first.
Yeah.
Right?
Yeah.
But
not saying it's
technically, yes. If you do it every day, if that's what you do every day and it's your entire life and that's your investment philosophy like it is ours, yeah, you could, because we have money in there right now. What's the difference between adding more or taking it out or whatever? Like, it's the default option.
I saw a post, that's why I'm asking.
Okay.
That said, I can't remember exactly what it said. Sorry. I just disappointed myself. It was a circle and the circle was drawn messy. And it said something like, make it first and perfect it later or something. Because it was showing that you need it in order to make it.
do as much as you can
Yeah.
now as quickly as possible.
I really thought, in my brain, I was like,
it was
this is
profound.
a good connection. And now I'm like, I can't remember exactly what it said. It was a circle. Sorry.
But you're right. You're absolutely right. It doesn't have to be complicated. Don't overcomplicate it.
Yep.
That's the default option.
Yep.
Okay.
It's do something and then you can work on the
small stuff later. The worst thing to do is to leave it around doing nothing.
Yeah.
Okay.
So I got 1 point?
Yeah, one's good.
Okay.
1 point.
1 point.
1 out of 3. Okay. Then it was debt and budgeting. Which one do you want to tackle next?
Budgeting.
Okay. What is the goal? What's the default option with budgeting? So, hey, Sierra, what do I do with my budget?
Do you have one?
I don't know. How should I budget? What should I set?
You should set your expenses, not track them. Step 1. And you should not tie your expenses to your income.
Good. That's two really good principles. Yeah.
So get your piece of paper out and write down your expenses. And then everything else, once you know exactly what your expenses are, everything else goes to investing.
Mm-hmm.
Very, very, very simply put.
Yeah. I would say the default option is to do something that works for you.
Mm-hmm.
There are lots of ways to budget.
Yeah.
If you are feeling it is restrictive, it is because you would do it, or not restrictive,
impossible,
in labor intensive. If
Okay.
you're finding that it's just taking up so much time and so much energy, you're doing it wrong. There are better ways to do it, as I've already explained in lots of episodes before.
Mm-hmm.
We look at our budget once a year, and then it's implementation, which takes you a little bit of time to e-transfer the food budget, and me a little time to go through a credit card statement and take the money from the right accounts, right?
Yeah.
Half an hour a month.
If that.
So
I just want to quickly say we also have been watching that show, Till Debt Do Us Part.
yeah. Great TV.
I was going to say, eventually I want you to do a react video to that. Yeah. But anyway, the last episode though, I said, oh, that's actually a good idea for people who
need
are
visual.
are better at visualizing, where she gave them fake dollars.
It's like Monopoly money.
Yeah. And they had each category on a card and they had to put the dollars into the categories. And I was thinking, wow, that's smart. But it's a lot of work. But I feel for somebody who's really struggling, that could help.
Yeah, because they were struggling on just making the budget balance, right?
Yeah.
And that's the thing. A lot of people, which is why the default is to do it, because a lot of people don't even know where their money is going. And if you're in that boat, it's just being in control of it is the key thing.
I think that's why she made them do that, because
absolutely.
they were chronic credit card users. They had no idea what they were spending.
Yeah.
As per the usual.
And depending on your problem, depends on the type of budget that you would apply. So, for example, somebody that has too much cash and their account just keeps going up and up, also has a problem budgeting. Also has a budgeting problem. Why are you looking at like, I feel attacked.
Why do they have a problem? What did they?
Budget. Those other people, not me. Because the point of a budget is to determine where your money is going, not to necessarily be restrictive on your spending.
Mm-hmm.
That's all it is. It's you're allocating. You're not budgeting. Doesn't have to be restrictive, which is why I try to call it cash flow management more than budgeting. Because budgeting
which sounds
also,
like way more fun. Who wants to budget when you can manage your cash flow?
Okay, it's important. Okay,
debt. Hit me.
Invest, or what should I do? I have $50,000 extra. Do I invest it? Do I pay off my mortgage? What do I do?
Okay, very specifically though, is it a mortgage? Is that your debt?
Good question. Yes.
Okay, then it doesn't matter. We've talked about this in another episode. On paper, invest.
So what should the default option be?
The default option should be invest, I think, because on paper.
Yes, absolutely. The default option.
Wait.
Look, you go.
3 for 3? Yeah.
The default option should be what is the correct thing to do based on the data and based on the numbers.
Yeah.
Ignore human emotion. That should be the default option.
Yeah.
And then you determine,
can I do this?
Can I do this? Why shouldn't I do this? And there are
That's a
lots of
good way
reasons.
to look at it.
There are lots of reasons not to do something perfectly according to the numbers. But if you were starting, if the default option is an emotional decision,
Or like, why should I do this?
should I? Yeah,
Versus why shouldn't I do this?
exactly. And that's how you should approach. If everybody approaches the big financial decisions, the ones that really matter in their life, that way, where they look at the numbers, they look at the data and say, this is what I should do. Why shouldn't I do this? The vast majority of people would be in a better circumstance, because it would stop all of the bad habits that people tend to do.
Or the I can'ts.
Yeah.
Well, maybe not, but it would maybe deter them a little bit.
It helps with the decision making. And also it means once you are in a place where you've actually looked at the data, actually looked at the numbers, actually went out of your way to get help with it, and then made sure that the person you're getting help from is actually doing that, because that's an important caveat to that.
Go back to an episode.
Then you're automatically in a better place to make these decisions, and it's most likely going to end up in a good place, right? Because you're picking the decision that's going to most likely heard of a good outcome. So they're the only ones. I wanted to just cover those few things, make sure that everybody was on board with
the default
option
okay,
should be.
well,
And there's a few other default things that we'll touch on in future episodes, when to take CBP and how much you should be saving and all that stuff. There's a few other default options that I like to make sure people have, but those are the core ones that come up most often.
Yep. Okay, so what are they again?
Defaults.
Default for
investing
is
100% global equity.
100% global equity. And then ask yourself, why can't I do this?
Yeah, why shouldn't I do this?
Step 2. Category 2, budgeting. Do something, right?
Basically. Yeah.
Do something. Category 3, debt. Invest
over paying off low interest debt.
Low interest debt, but that's why I specifically asked.
Different. High interest debt is very different. If this isn't a mortgage, the questions are the other things you have to determine.
Yeah.
That the difference between somebody starting at 30 and if they're investing for a 30-year time frame, there was one scenario I looked at where the difference was almost $800,000. They both became millionaires. One of them ended up with $1 million in a portfolio because they put an extra $1,000, I think it was, they paid off their mortgage in half the time. But the time in the markets makes such a big difference that you just cannot get that time back.
That's why they say time is money. Sorry.
You're wrong. You're not wrong. I think it's quite reasonable.
How do you know that's not where it came from?
You're not wrong. You're not wrong. Okay, perfect. We'll leave it there.
Awesome. That was a quick one.
Yes.
Yay.
My chicken is also in the smoker, so I need to go.
Yeah, I'm hungry.
Go and grab that. Okay, perfect. We'll see you in the next one.
Bye.
Bye.
Thanks for listening to this episode of the Plain English Finance Podcast. Tré Bynoe, Certified Financial Planner, Chartered Investment Manager, is a financial planner with TC Wealth Management and Aviso Wealth. You should always consult with your financial, legal, and tax advisors before making changes. This podcast is provided as a general source of information and should not be considered personal investment advice or solicitation to buy or sell any securities. The views expressed are those of the individual and are not necessarily those of Aviso Financial Inc. Mutual funds and other securities offered through Aviso Wealth, a division of Aviso Financial Inc.